Tata Motors has come out with its second quarter numbers. Net profit at 3,764 crores, fallen short of street estimates. Revenues have met street. Parikshit Luthra is here with the numbers. Parikshit, what is the number looking like?
Well, as far as consolidated revenues for Tata Motors, largely in line with CNBC estimates, and this coming in at around 105,000 crores. EBITDA coming in at 14.4 thousand crores versus a CNBC poll of 13,681 crores. Net profit coming in at 3,764 crores versus a CNBC poll of 4,039 crores. Of course, JLR sales have contributed to Tata Motors' growth in a significant manner. We've seen strong EBIT growth. The margin guidance for EBIT has been raised to 8% for FY24 from 6% earlier. And the growth has been coming because of lower commodity prices, the operating leverage and volume ramp up at JLR as well. We've seen strong growth in the EV segment as well. The company has said that they're optimistic on demand going forward, even though they do expect moderate inflation and overall a stronger performance in H2. We are joined by Ashwin Patil, research analyst at LKP Securities. Ashwin, thank you very much for joining us. Take us through the big highlights of the Tata Motors numbers. How do they look to you?
Look quite impressive to me, at least, at the revenue front, it was quite in line with our expectations as well as the street expectations. And the main USP of these numbers was that the JLR numbers, the margins at JLR, at 14.9% was really very impressive. And we know that how the product profile or the product mix is panning out for them. And the order book is currently at about 168,000 units, out of which Range Rover Sport and Defender are forming the bulk, about 77%. So I think this quarter as well, the numbers were quite impressive with the main models of JLR performing well in different geographies as well as in the domestic markets. We saw that the commercial vehicle industry is slightly going through a slowdown, but the similar story has been observed on the passenger vehicle front as well. But JLR has been the top performer for the overall consolidated numbers of Tata Motors, and going forward, I think that improvement in various geographies for JLR should aid the numbers going forward.
When it comes to the domestic business, especially Tata Motors passenger vehicles and also the commercial vehicles, it is a bit of a mixed bag. Take us through some of the challenges that you feel were there for Tata Motors, and what's your outlook going forward?
See, as far as the commercial vehicle segment is concerned, we all know that there is a slight kind of a slowdown over there, because the last year was strong, and going forward on a high base, as well as a slight slowdown in certain economic activities in the country. I think that commercial vehicle, the cyclical business of commercial vehicle is facing some sort of softness, and therefore this year we are not expecting something to a great kind of numbers, maybe like somewhere near a lower single digit or a mid single digit kind of growth for the industry we are factoring in. Also for the passenger vehicles, I think the SUV segment has been one of the star performers, and that is leading the growth to the passenger vehicle segment. We know that in last couple of years the chip shortage troubled this industry, but now since it has eased down, going forward the passenger vehicle business should pan out well, and it should post a growth close to about 10 to 12% this year.
Right. And the company also, of course, saying that there was a transition to newer versions of some models, and possibly because of that, there was a decline in volumes. And we have 15 to 20 days of the festive season all the way to Bhai Dooj also left. Coming to JLR once again, the EBIT margin coming in at 7.3% in Q2, 8% in H1. The target margin for FY24 has been increased from 6% plus to around 8%. How do you see this, and how do you see this contributing to Tata Motors' overall growth for FY24?
Definitely. I mean, the EBIT margins were facing a lot of challenge. Last year, we saw that, hardly they posted close to about 3% kind of EBIT margins, and now they are at about 7.3%. So more than double they have, clocked in for JLR. So that is really very impressive. We know that the currency environment has not been that, very. It was not very hawkish as such, and things are easing out for JLR in various geographies. Last year also we saw that China facing very uncertain times through COVID coming and going again and again. So that has troubled the Chinese geography. Now it is settling down a bit. Also, US and Europe, though not great kind of growth, but still some sort of better performance has been seen in this year. And as far as the model performance is concerned for JLR, almost all the models are performing well. So that kind of growth we are seeing for JLR this year, and that the product mix improvement is leading to a better EBIT, and therefore we think that going forward, definitely the company can touch the margins of about 8% on for JLR EBITs.
All right, Ashwin. Of course, the better chip availability and continued traction in new models has helped JLR, and the company is expecting wholesale volumes, production, all to gradually increase in the H2 of FY24, and they're looking at a free cash flow of around £2 billion in FY24. Thank you very much for joining us. With that, Archana, it's back to you.
Right, thank you, Parikshit, for those numbers from Tata Motors. Let's talk about Tata Steel.